Malaysia is being audited by the Inland Revenue Board of Malaysia over its intercompany loan transactions with Watson Labuan. Concerned about possible tax penalties and legal consequences, the management team gathers to discuss their next step.
Hello, are you a tax consultant?
Hello. Yes, I am a tech consultant. How can I help you? Yeah. Okay. So we will meet today at 3 p.m. at your office. Okay? Alright, go to. Bye. Sorry, I am Firdaus, your tech consultant.
I am the financial director of this company, and this is our defense lawyer.
I see. Okay.
Have a seat, have a seat.
Alright, thank you. Ilhan, we need to carefully review the intercompany loans that was in Malaysia took from our offshore related company, Watson Labuan, in 2003 and 2012. The total principal is around USD 38 million, which we used to acquire shares in Watson Malaysia.
Yes, Firdaus, the Inland Revenue Board of Malaysia, IRBM, is auditing us for years of assessment 2010 to 2012. They are threatening to disallow our entire interest deduction. They claim that because we only pay the yearly interest of 3% plus LIBOR, but have not repaid the principal capital yet, the loan lacks commercial justification.
Hey, in my experience, this is classic corporate tax dilemma. If we accept IRBM audit findings blindly, we will face millions in additional tax and heavy penalty under Section 113 Subsection 2 of the Income Tax Act 1967 for filing incorrect returns. However, we must act with integrity toward all our stakeholders, the IRBM and the public who depend on fair tax revenue for national development.
Exactly, Faris. In corporate practice, we must draw a clear line between illegal tax evasion under Section 114, which involve deliberate and criminal concealment, and legitimate, permissible tax planning. Our loan is not a sham, it has real business synergy. But how do we prove to the IRBM that our structure is a permissible tax avoidance scheme and not an abusive one under Section 140A?
That is where our transfer pricing documentation comes in. We must show that our interest expense meets the requirement under Section 140A. It was genuinely incurred at market rate and reflect the true commercial substance.
After preparing their transfer pricing documentation, the Watsons team attends an official audit meeting with the Inland Revenue Board of Malaysia. Both sides begin debating whether the loan arrangement follows the arm's length principle.
Come in.
Alright, thank you for coming, Watson's team. Erasby Director, the IRBM has a reason to believe that your loan from Watson Labuan is an artificial transaction designed to alter the incidence of tax under Section 140A of the Income Tax Act 1967. No independent party in the real market will lend millions without a fixed capital repayment schedule.
With respect for him, under Section 140A in Clause 3, if the IRBM believe a transaction is not at arm's length, your power is restricted to substituting the price to reflect an arm's length rate. You cannot simply disregard the whole transaction and adjust our interest rate to 0%.
But we look at the economic substance. Under Rule 8, Subsection 1, Clause B of the Income Tax Transfer Pricing Rules 2012, the IRBM may disregard any structure if the arrangement differ from what independent parties behaving in a commercially rational manner will adopt. Your non-repayment of the principal sum is directly contrary to the arm's length principle in Article 9 of the OECD Model Tax Convention on Income and on Capital. Thus, we are disregarding your interest deduction under our anti-avoidance powers.
Fahim, Article 9 of the OECD Model Tax Convention is a broad international guideline, but under local law, Rule 8 Subsection 2 of the Transfer Pricing Rules 2012 is very clear. If you disregard a structure under Rule 8 Subsection 1, you must make an adjustment that reflects a structure that independent parties dealing at arm's length would actually adopt based on commercial reality. Setting our rate to 0% means you are treating a massive loan as a free gift, which completely ignore commercial reality.
We act in absolute good faith. Our interest rate of 3% plus labor was benchmarked against the commercial based lending rate, BLR, in Malaysia, proving it is not excessive. There is no deliberate misrepresentation here to justify penalties under Section 113 subset 2. This is legitimate business arrangement with real commercial substance.
As the dispute could not be resolved during the audit, the case is brought before the High Court. The judge now examines whether the IRBM action and Watson's tax structure comply with the law. This court has carefully evaluated your civil number WA 14-2006/2020 between the Director General of Inland Revenue and Watson's. We are ready to deliver our judgment. First, the Inland Revenue Board of Malaysia's application of the transfer pricing provision of Section 140A is legally flawed. Under Rule 8 Subsection 2 of the Transfer Pricing Rules 2012, when adjusting related party transaction, the Inland Revenue Board of Malaysia is statutorily required to substitute it with a realistic commercial arm's length rate that reflects commercial reality. Second, regarding the burden of proof, Watson's prepared comprehensive contemporaneous transfer pricing documentation, benchmarking their rate against the local base lending rate. Under the landmark judicial precedent of Edwards v. Bristow, this court must intervene when findings of fact or inference drawn by a lower tribunal are inconsistent with the primary evidence. Once the taxpayer provides a legitimate compliant transfer pricing report, the Inland Revenue Board Malaysia cannot just issue a bare denial. To reject it, the Inland Revenue Board Malaysia must produce their own countervailing transfer pricing study or a functions, assets and risk analysis. Relying solely on an Investopedia article is an error of law. Finally, we address the penalty under Section 113 Subsection 2. This penalty is a discretionary tool to punish taxpayer who deliberately or negligently submit incorrect returns. Watson's obtain professional independent tax advice from PwC Malaysia and practice full disclosure, proving they act in good faith. These transactions reflects genuine commercial substance and tax efficiency rather than an abusive tax avoidance scheme. Therefore, the court finds that Watson's loan had strong commercial reasons and was a permissible tax planning scheme. The Inland Revenue Board of Malaysia's appeal is dismissed with cause, and all additional assessments and penalties are set aside. Court dismissed. Following the court's decision in favor of Watson's, the team reflects on the lesson learned from the case. They discuss the importance of proper tax governance and compliance strategies.
This High Court decision is a massive victory for us, but it really highlights the importance of robust tax risk management. What compliance strategies should we focus on now?
This case shows that preparing our transfer pricing documents early is our best defense. So under Section 82, we must regularly keep all business records for 7 years. We need to regularly update our market studies and record all related company transactions to satisfy Section 140A before LHDN even start an audit.
Additionally, we must ensure all intercompany agreements are legally watertight. Our loan agreement was legally structured as an on-demand and committed facility, which is a recognized commercial banking product. Every intra-group contract must reflect this level of commercial substance to withstand IRBM scrutiny under Rule 8 of the Transfer Pricing Rule 2012.
I agree. Upholding professional ethics and good tax governance means we do not engage in unlawful tax evasion under Section 114. Instead, we practice transparent tax planning, supported by qualified tax advisor to ensure our business operation remains sustainable and socially responsible.
The Watson's case becomes an important lesson on ethics, professionalism, and integrity in taxation. Each party shares their final reflection on the responsibilities of their professions. In conclusion, the case of Malaysia v. Watson's 2023 provides future accountant and tax practitioner with a profound lesson in adab, professional ethics, and integrity.
For tax authorities, it reminds us that tax audit under Section 140 must be conducted with absolute fairness, relying on objective economic evidence rather than arbitrary assumption.
For tax consultant, it emphasizes our duty to provide honest, highly researched advisory service to keep business compliant with the Income Tax Act 1967.
For legal practitioners, this highlights the importance of defending the rule of law and protecting compliance of taxpayers from administrative overreach.
And for corporate leaders, this case teaches us that upholding work ethics, keeping meticulous records, and acting in good faith are the foundation of public trust and a sustainable corporate future. Thank you.